All right, good morning, everybody. How's everybody doing this wonderful Sunday morning? We're gonna take a look at something. um, I got this. Let me just make sure everything's going on. I got this Aussie Yen here pulled up. This is a bar replay, but I just was messing around with it this morning and seen something very, very, very fantastic, and I just wanted to bring it up. So down here we know is support. When this thing look how this thing traded straight down back to the level. Now anytime this right here wouldn't necessarily be bearish, immediately come back. Like if you would have came back down to this area in like a day or two, then that would have been extremely bearish. You can see that this thing downtrend of the current time, this is back in 2012, so this was a long time ago, and just 4 years after the massive crash that happened. If you come over here and look, you'll see there is that big wonderful thing there. So coming off of all of that, 4 years later, Aussie Yen's basically been trading in a range, but that range is big. This is a daily time frame. So basically, this has been in an uptrend. You found a bottom down here and you came out of it just as quickly as you went into it, right? If you would have taken several days to months to try to get out. Let me see what's going on. It looks like it's having a hard time keeping up. That's okay. We'll see. We'll go with it. If it drops off, I'll just re-upload. But right here we go into this area. That would be an area of possible longs trying to catch this. Now you did go up, make a higher high and all that, and you came back in pretty rapidly. But watch what happens. You get a massive expansion off of that level, and you trade up to the Heath level right here. Now this is be a supply zone, right? Overhead supply. This is where people are going to look to get short. Also down here, if you noticed, you didn't take any of these wicks out when you came into this level. So you trade up into that right there, and that would have been a fantastic shorting opportunity. Came back in for a retest 3 days later. This is why when I tell you guys that you have time, you do not ever have to rush a setup. This is dailies. I'm looking at dailies. So had you gotten short on this day, push up into here, or even on the second day, you can see 2 days later, price came right back into there. So now we are only generally looking for inside daily range expansions. So we're taking day trades per se. So on this day, had you gotten short, you would have been waiting for that low to get taken out. And at that point, that's when you would have taken off 2/3 of your position and moved your stop to break even. Look how just 2 days later, price came back and stopped you out and then continued to the downside. It gets even better. For anybody that got long here, like swing traders, say they just immediately got long there, watch this. Oh, hang on, let me pause that, do it this way. Price comes down, straight down, you have 1 day of pullback. So right away you see a Heath level here. But if you come back down like that, chances are this is what they're aiming at. Not necessarily the level. It would be this wick low. This wick low. Like that's where the liquidity is for long traders, people trying to get long. Now, why would you go up and then come back? Well, to make people think that they're right on the position, come back, take out that liquidity. So you could have taken shorts in this area, aiming specifically for that as well. There's a day, there's a pop, hold, pop. What do you think is going to happen? You think you're going to get a bounce from here? Was this a good enough purge? Did you take out any of the liquidity? The answer is no. Did you take out this liquidity? The answer is no. Chances are, though, a push that low back to anybody's entry, they would have had to absolutely get long at the low of that day in order to not be stopped out. And then watch, boom, this day right here, this is what we're targeting when we're looking for these short side setups, even long side setups. If you're only looking for an intraday trade, there's a good probability that you're going to stab down to that. And this is when we're taking profits. Now, this is the thing that I want you to understand. This price action right here in this section, just this section, took from August 2012 all the way to October the 8th. So from the high to low was about 2 weeks, a little over 2 weeks, and then a couple months. And you're coming back in here, you're taking out this liquidity. All right? Watch what happens after you do this. So basically what I'm trying to say is anybody that got long here expecting a move to the upside, see how big this sell-off was? This makes people think that this is a pullback and you're having short side continuation. So many people are off on the wrong side of the trade. So many people were looking for short side continuation, and you got it. Had you shorted this, you could have shorted this multiple times and made profits all the way down. But I'm always looking for a big trade. Like the trade that I took on pound yen at the beginning of the year was the best trade I have ever taken in my life. I got in that thing as a day trade, took off 2/3 of the position, and then let the rest run. And essentially, I got into an uptrend that basically played out for most of the year. And that's what I'm wanting to always get in, right? So we need to find ways to find this out. I mean, if you put yourself in the market right here, what do I say? Once you take out the liquidity, any liquidity, now you didn't get all the way down to there, or did you? Yes, you did. So basically on this push, you took out this liquidity, all the way over to here. So basically from July or June the 29th, all the way to October. So June, July, August, September, October. 5 months of liquidity was purged right there. That's when the high probable setup ends, because you don't know if they're buying into this liquidity. What's down here? Lower sellers. Well, if you want to be a buyer in the market, you always want to buy from someone who's willing to sell at a cheaper price. That's what we're looking for in the market. So basically, that's what happened here. Everybody got messed up. They were on the wrong side of the market looking at this for short side continuation. The liquidity was bought up, and just look at this run. That's a big run. Why is that such a big run? So much liquidity was down here. So much, in fact, that once the market found the buyers, you left out of the area, you came back in for a retest, and you just simply left. All right, look at this. This move to the upside is as big, or if not bigger, than this move to the downside. You've taken out this up here all the way back into here. So now, instead of looking for trend continuation or whatnot, if you could get into this or even on this and catch something like that. Forex market is one of the most difficult markets to trade because it's the currency of a country. So essentially you can have France needing to buy a lot of Aussies, or they have a lot of yen and they need to transfer that yen into Australian dollars or whatever. And they have like literal train cars of currency, paper currency. So they're trying to get into this position, and that's what causes massive moves like this and longer dated trends inside of the FX market. But I just thought that was fantastic when I was looking at it, because when I was looking at it, I was like, this would be a probable opportunity for someone to get long, because you just took out all that liquidity, right? And you're coming off of a massive downtrend. So this is choppy action, right? Come down, smoke out everybody, and then see you later. This is the high that would have been taken out. It got taken out. Even then, when you took that out, look how many people were trying to sell that. Right back down. You give 3 days of downside, and then boom, right back up. So there's no need to rush on positions. There's no need. Like Bitcoin right now, so many people are not even caring about what's going on in Bitcoin because they're bored. Everybody's bored, right? Because Bitcoin's just chopping around back and forth, side to side. Well, there's getting ready to be a probable big move. I just don't know if it's going to be back up or if it's going to go down. But Bitcoin's been chopping around and getting tighter and tighter inside of the range. You're going to see an expansion move either down or up. And I want to be able to catch that. So we're going to try our best to get positioned to catch it. The problem is you could get a false move first that could take a week to play out, right? You could have straight up bullish candles for a solid week or even two, and then the real move comes in, and then see you later. So there's no need to rush any position. If you find yourself taking 5 to 10 trades per week, you need to slow down. You're not doing it right. I took 4 trades last week in FX and 2 in crypto. All 4 trades in FX were successful. 1 of the trades in crypto was not. All right, so that's 6 trades. That was a very active week for me. Wednesday, I seen setups across the board in almost every currency, almost every single currency. And those of us that, or those of all the people that trade beside of me every day, they know I basically was like, look at this. You can pretty much take a setup on anything you want. Everything looks fantastic for a setup. And I took the Aussie yen short, and it turned out to be a fantastic trade. I also took the pound USD short on the same day. That turned out to be a fantastic trade as well. So when things set up across the board like that, you can bet that there's probably going to be a pretty big move incoming. But if you could catch one trade like this in a year, just one, it will set your whole year. You don't have to worry about entering and exiting positions all the time. When people hear intraday trader, they assume that I'm taking 10, 15 trades per day. That's not what I'm doing. I've went weeks before without taking a trade. It's never really weeks back to back, but like in 1 week, I may only take 1 trade because it's the only setup that I see that I like, that I'm willing to risk money on it. And then there's been some weeks where I didn't get a trade. I did not get a trade. So this is what I want you guys to understand. If you could get yourself to slow down and be a little bit more patient, don't care and don't worry about what you may or may not miss out on. You can't see the future, so therefore you don't know if you're going to miss anything. Are you looking to buy this up here after all of this and you're afraid you're going to miss something, so you want to take a position on it now? Down here was the entry, right? Down here was the entry. Obviously nobody knew that was going to happen, right? Nobody knew. I would have fell victim to this as well, more than likely, until you got up in here and took out these swing highs. Then I would have been looking for bullish entries. And even if you would have gotten in up here, your move is not super extended yet. Now, way up there, it is super extended. If you pull up the RSI right here, okay, we would not have been looking for bullish entries in this right here. Absolutely not. Why not? Because the RSI is below 50, right? So we would only be looking for short side setups, and we would only be targeting this first area of support because we know it's support. We absolutely know it's support because price said it was. When price put in that bearish candle on the close, the very next day was a bullish move out of the area, and it moved out of the area with haste. With a lot of haste. So you do not have to rush positions ever. Now, once we got up into here and got above this 50 spot, where did this take place? This took place on this bullish candle. Now, the RSI is a momentum oscillator, so you can get from oversold to overbought in literally like 2 or 3 days. So I'm not looking at this as a momentum oscillator. I just want to know who's in control of the market. If you're below 50, it's a pretty good bet that the bears are in control. And if you're above 50, it's a pretty good bet that the bulls are in control. Now, if you trade up here into oversold or overbought, because that's what a lot of people like to do. They like to short overbought markets, and that's not a very good trade, is it? Right here is when you're overbought on this oscillator. Right here. So you're getting short there, right? Look what happens. You traded sideways for a solid week, and then you left the area. and then you became even more oversold, right? Then you got a 3-day pullback, putting the oscillator back down and into below overbought. So it's still bullish, right? You're still bullish until you get below 50. It's just, this is your bearish right here. This is where people are saying there's the short signal right there. You're making higher highs on your oscillator, and or lower highs on your oscillator, and you're making higher highs on price. That's a divergence. So where did the divergence start to play out? Where? Over here. So from the time you put in this high to the time you put in this high up here, this was your divergence right here. This high, then this high correlates with this high. This high correlates with this high. You're still going up. Look how many times you took a short on bearish divergence and got slaughtered, right? We don't use indicators in the way that other people use them. We don't care about overbought. We don't care about oversold. We don't care about divergence. We don't care about anything. I bring it up on the YouTube videos just so that way people that are looking for that kind of stuff see that I see it too, but I'm never ever taking trades based upon it. I am always taking trades based upon price. So anything on the 50 is a good buying opportunity. Once you get into the overbought areas, though, that's not when you're looking necessarily to take new, fresh, bullish positions on an asset, because eventually you can get a massive pullback, and that's exhaustion risk. So this isn't a massive pullback. There's a news item right there, big fat daily candle like that, and then look at this, right? Boom, this big bearish candle. Everybody's assuming, yes, yeah, we're going lower. Where did this bearish candle hit? Let's get back to here. You're in below the 50 on this explosive push. This was a news item. I would almost guarantee it. Some kind of news came out, an NFP or something like that. Got a big high push, taking out all the stops above here. You did not, oh, yes you did. So you took out all the stops. There's a slight push above there, so you got all the stops. Anybody up here, they're done, it's over. Big push to the downside. So now anybody that was looking to play this divergence to the short side, now they see that divergence playing out. Where are we on the RSI? Let's go one more day into this, if it will. One more day. Lower stab. Get people thinking, yes, this is definitely a continuation. We're looking for sells, all right, on a 50 test. Not yet. Boom, this day closes and you're over 50. So you're not selling this market. We're not selling the market. Why? Because the indicator said so? No, we're not selling the market because what do we get? We got a daily closure into our level where we would be specifically looking to target short side entries. Remember, anytime I say, if I'm like, especially in the morning video streams when I'm doing the mornings and I'm trying to show you what pairs I'm looking at and where the possible setups will occur, if I say if I get an hourly closure into and above this level, then that short trade is scrapped, and vice versa would go for the long side trade. It is scrapped, right? So this is a retest. This is cooling off the oscillator. It's getting everybody bearish, and then you get one final push up probably before you start to head lower. Big strong move to the upside. Let's see if we come back down and take out these people down here. Nope, you're going higher. So I don't know what happened in the Australian dollar to cause this much strength. But look at this craziness on this oscillator. And also back in 2015, 2013, there was a lot more volatility in FX. Volatility in FX has been chilled out since late 19, early 20. It's been really slow. Right? Really slow. Here's that level that we were watching. There it is. Just play with this tool, guys. Use your favorite indicators if you want. Play with it. Use it on a higher time frame, not a low time frame. Don't be trying to take 5-minute entries on every bearish candle. That's not the way I trade or train you guys to what to look for. You're looking for daily opens and closes for the first and most important. What did yesterday do? Where's yesterday's open? Where's its close, high and low? Know where that is. Then you go into an intraday chart, 8-hour, 4-hour, hourly. Where are all the support and resistances on those 3 charts intraday? You know where your daily is. You know what you're looking for. Then you can go into the 5-minute chart and enter when you get close to one of those higher level areas. That will start to make your entries a little bit better, and they will hit more often than not, right? If you're taking too many entries now, I encourage you to stop. Just try to take 3 fantastic trades per week. Every week, almost. Sometimes you get a bunch of choppy action like what Bitcoin's doing now. You have no control over that. What you do have control over is you can say, well, I've taken 3 trades on Bitcoin in the last 2 weeks. All 3 of them have failed. This thing is going up and down. I am no longer looking for entries on Bitcoin until we break out of this range, right? That's how you do it. So this way you're limiting your downside. You're protecting your risk, and it's always about that. So let's go over here to Bitcoin real quick, because I'm expecting a move pretty soon on this asset. Pretty soon. So we've been chopping around for some time now, right? And the last couple weeks have done nothing, like literally nothing. This is a range. This bearish candle is your range. So let's get rid of the drawings. This is what I am waiting for. This close, or this opening price, this is your capitulation candle. The low has already been taken out. All right, that's your low. It's already been taken out. So basically you're waiting for a daily close above here or below there. And if we get that, yes, you missed out on all of this range. But if you look at it like that, then you're not looking for high probable trades. You're still in the mindset, oh, I want to catch as much profit as I possibly can. That's not what our job is as traders. Our job as traders is to mitigate our downside risk and take high probable setups. There is no entry in Bitcoin right now or for the days to come that is a high probable entry, right? You do have massive support levels that you can watch. Absolutely. Right there's one. You can watch this. And then you've got a resistance level right here. This is keeping price. So that's a smaller range inside of a bigger range, inside of a massive range. You see what I'm saying? So pick your trades. High probable trades are the high probable trades. You don't know what's happening. This is what we know. Bitcoin's range bound. So I could take a long here and tomorrow get stopped out. Like on Algo yesterday, right? I still have my entry up, hopefully. No, I don't. Oh, yeah, there they are. Good. So here we go. This is range bound activity. Let's go into the 4 hour so you can see what I was looking at on my entry. This is my entry. Here, right there was my entry. My stop was below this wick. Once I took the entry, price started to trade away. I put my stop right under that wick. Why did I get long there? Well, this push up was a breakout of this right here. This bearish candle closed well above it. This came back in and tested this bearish candle. Okay, so let me get rid of my stop loss for just a second and show you what I'm talking about. We came back in and tested this bearish candle here. There's your breakout above resistance on a 4 hour. Here's your retest of your 4 hour support, right? I'm taking a chance there. I do not know that it's going to hold. I can get long and 10 minutes later, this thing can go lower. I have no clue what's going to happen. It's a higher probable setup, but I'm inside of a range. And I know I'm inside of a range. So if I'm inside of a range, I know that there's a higher probable chance that the trade won't work out as good as I want it to, because I'm always wanting a trend continuation. You just don't ever get that more times than not. Like I caught one this year on the pound yen, but I'm always looking for it. So there's my entry. Here's my stop loss back below there. We got up here to this wick. This is when I took profits. Also notice there's a Heath level right here. So from this wick to this level is your area to take your profits. Why? Because there's a resistance there. There's supply right there. People are going to be looking to get short right there. As they're not shorting down here, they're waiting for a pullback. Guess what? They got their pullback. That was their pullback. That's their entry. Stop above this candle. Now their trade was working out. Where did they take profits? They took profits ahead of this level. Boom. There's your profit target. So that's how you're trading inside of ranges if you want to be successful. I took profits. I moved my stop to break even. 3 sessions later, boom, stopped out of the trade. Then we played around this level again, went in for a lower push just to go ahead and stop anybody out that got long here or here, which is why I say you have patience. Don't never rush to get into a trade just because it works sometimes. Like this chance, it worked, but look what I was going off of. This was your breakout, a fantastic, strong breakout. We came back in, we tested it, and then we started to trade away. So if you look at it on an hourly, if I haven't broke it, this is what you got on an hourly, right? Here's that level right there, that bearish candle. It's the same level. There's your explosive move to the upside on your hourly. 2 hours you came back in for a retest. On this push lower right here, there's my level that I'm watching. So if price continues down and stops me out, then that trade is over. It's done. Then I am waiting because chances are this was just a selling opportunity. So this is why you're getting choppy and range-bound activity in all the crypto assets, because short side traders are taking short side positions at the top of the range. Long traders are taking long positions at the bottom of the range. And both people are getting beat up, right? Both people are getting beat up. This looks like it wants to go higher. And there's a couple other cryptocurrencies that I was talking about to the Discord this morning. Let me go grab them real quick. Where's it at? One is Compound. Right here it is. Let's go out to the 8 hour so you can see what is going on. So Compound is off the lows, right? Compound took a beating worse than most other cryptos. See, it was making lower highs and lower lows. Once it took out its capitulation wick to the downside, boom, boom, lower highs, lower lows. From these lows down here, you have moved off the lows to where current price is now, 128%. So think like a trader. Do I want to short something that is 20% off the lows? Or do I want to short something that's 120% off the lows? Well, if I'm looking for a pullback in order to get short, I want price to move up higher, because the higher price goes, the better the short opportunity. Now, this looks like an opportunity to get short. When will it no longer be? Well, I will tell you. Watch this bullish candle right there, 492.70. You get an 8 hour close above that level. You are not looking to go short because price just told you something. It said, there's your line in the sand. There's where you want me to reject. However, I did not reject. I came right into your front door and now I'm sitting on your couch. What are you going to do about it? You don't short that. You know what I mean? You're probably going to go higher at that point because people are shorting it as soon as it touches that level. And if those shorts are not as aggressive as the buying going on that's pushing price higher, all you're going to get is a subtle little tech of that level and then a pullback. And then the next session is going to be right back up there knocking at your door again. That's bullish. That's not bearish. What we want to see is we want to see this thing push up into this level and go blam, a big fat rejection candle. Then we will look for price to trade up, and then we will find our entries. And at best case scenarios, you can throw your stop above that wick. So that gives you, a nice risk to reward. Because if Bitcoin does crash, crypto assets are going to go down with it. And this asset is up 120% off the lows. The next one that is up 120% off the lows is Luna. But does Luna look like a short? Absolutely not. No way, Jose. Look at this thing. There was resistance. Boom. Then you came in for a pullback. Took out the low of that, but you didn't even test the midpoint of this, right? So this is the candle that you need to close below. Once you get to close below your breakout candle, then something is different. Something has changed. You tested the midpoint range of this breakout candle, and what happened? Bullish price action. This is a buying opportunity. Not for me, not for us, but for some people, right? There it is. So this is not bearish. There's your 8-hour closure. Better yet, this would have been what we would have been watching and see what happened. Here's your bearish pullback. It's just a pullback. Note, midpoint, this range, or just look at that resistance level right there. Then you traded down, tagged resistance, old resistance, now support. Then you traded up, tested the Heath level, and closed green. That's not a rejection. That's a bullish close. You traded all the way down, then you traded up, tacked the Heath level, and closed bullish. You're not looking to short this. Not yet. This would have closed red below here. Yes. Now you're looking for short side entries. Well, not really even, because this breakout candle's got to go. Right? But I'm just trying to get you to see what I'm seeing, because a lot of people are taking those entries and they're not working out, but they're taking entries at the wrong time. This isn't a short yet. It's got a lot of bullish momentum. Let's go to the daily. I only look at the RSI on the daily time frame. That is it. All right? Look at this. This is momentum to the upside. You don't try to short that. That's a runaway train. Runaway train. When you want to short this is when you take out this bullish candle right here. This one. This is your breakout candle. Boom. Straight up. Broke out above this resistance level. That's your breakout candle. You need a bearish candle to come down, take out this candle, then any push up into anything up in here on a smaller time frame chart. Then you would be looking for short side entries. That's the higher probable setup. But as long as you're above 50, that's a choice you have to make, all right? But I do know that these things are trading up. The problem with Luna is it got crushed. Like it came off 80% from the highs. So this bounce could just be, well, it's 83% off. That you can't get a better deal than something 83% off in most cases. So if people like this, then that's a good price to buy it. So we don't want to short it in front of that. I'm looking for Bitcoin. If it falls, then these are my two favorite assets to short, Luna and Compound. All right? Those are my favorite ones to short. But this isn't going to happen anytime soon. This could happen next week or the week after. We got to let Bitcoin do its thing. So let's go back over here and then I will start answering some questions for you guys. I just wanted to, first and foremost, I wanted you to just to show you the bar replay. That's how I use it. And I still use it. I still use it now. Even though I can trade and everything, I know what I'm doing. I still look at it because you're always going to be learning. The markets is always evolving. And I want to keep my edge sharp. So I use it as much as I can. Where is Bitcoin? There it is. So we know we're struggling on a weekly resistance or support level. That's what we know. All right, that's what we know. Here it is, right there. That's your weekly close. That's the one that's holding Bitcoin back. There, boom, boom, boom. Multiple tests, but unable to close below it. So this is starting to shape up and look a little bit like accumulation. All right, but. This is support too, right? And you're trading below it. So today's close in 8 hours, is it close above this? That's going to look good for the bulls. More better, or that's not a word. How can I say that? It's going to look a lot better for bulls if that happens. If you close below this support, and it has been support since May the 17th, 1, 2, 3, 4, 5, 6, 7 weeks, this level has held support. So this weekly close below it at 34,709 will be indicative that the bears are firmly still in control. Yes, and they got a new breach, a new close below support on a weekly closing basis. So any push up into price, probably to test the opening price of this bullish candle's close, apologies. That will probably be a wick, and you can probably look for lower prices. This thing needs to get up here to close. It still doesn't look strong, but it would be much better, as this will be the next level to fall. And then you got a lot of deep reach wicks below that level, so there is some support and resistance levels on dailies in there. But the main important thing is this is your weekly or your yearly open. There is your yearly open. There is your yearly low. If you take out those levels, you have taken out Bitcoin's entire year. The whole bullish part of 2021 will have essentially been wiped out. Gone, right? That's never good. That's never good. People were saying mid-cycle, yada yada. I'm telling you right now, that's your yearly open. Something bullish should not be trading at its yearly open 7 months into the year. Does that smell bullish to you? It doesn't smell bullish to me. So keep an eye on that yearly open, that yearly low. Because that's what Bitcoin looks like it's trying to do. This is a quarterly. It just opened though. But look how small this range is compared to this quarterly's range. So what I'm trying to say is this quarterly candle's going to open up. You're going to have a range expansion on this candle. This is what we're looking for. Trade talk. We are looking for this range expansion, either to the upside or to the downside. If it breaks to the upside, remember around 48 to 52K is that 618 retracement level of your push lower. That's going to be a fantastic spot for people to enter short positions and to exit longs from down here. So they didn't want to lose all of these profits. If you do get that push up, you're going to see more intensified selling. I don't know if Bitcoin's going to continue up and make all-time highs, but I know if I'm long going into that area on a day trade or a swing trade like on Algo or something, I will be checking positions and changing stuff around. I'm always going to hold what Bitcoin I own. Okay, I buy Bitcoin on the weekly closes. When they close red, I buy. I buy a very small piece with some cash that I have laying around that I don't need. I buy Bitcoin with that. So I'm not accumulating with like 10%, 15%, 20% of my life savings. I'm buying small pieces. Over time, I will have a big position in Bitcoin, but it's going to take years for that to happen. All right. The reason I'm going in small is because of Tether. It's too iffy, washy right now. So I don't want to just go in deep. Now, Jordan went in deep and he got handsomely rewarded, right? He put in 50% of his life savings, but they were down here. It was at $9,000 right in front of the halvening. That's when he bought. So his money that he put in down there has quadrupled essentially. He is still setting in fantastic profits. It's not nearly as good as it was when price was up here, but still, if you buy in at 9K at your cost basis and you're setting at 33K, that is still almost a 3x. That's fantastic, right? On your life savings, you 3x'd your life savings. Yeah, that's a pretty nice trade. So he's got a longer time frame like I do. And you guys, I know you guys, especially if you're new, you're trying to get rich tomorrow. And I understand because I've been there. But just be careful. We're going to see a range expansion to the upside or to the downside. Right now, the bears are in control. You're testing weekly supports. This is your yearly open and your yearly low, right? So YO, yearly open, as I want to leave those two levels on my chart. And then yearly low. And you've already tested the open on this week here. You tested that. So, yeah. When you test a big level, you generally want to see a bounce, right? A bigger bounce. You tested that level, traded up, put in basically an inside week. This week you're trading lower, but it's choppy and the ranges are small. The market's going to have a move soon. Hopefully it goes up, but we will see. All right, guys, let me answer some questions. Happy Sunday to you, Janet Swift, as well. Good morning, good morning, good morning. What's up? Hello, fam. Good day. Good morning. What's up, Heath? What's up, everybody? Just wondering, how should paper members get notified of the live stream? Just got an email 5 minutes after this start. Yeah, I put it in. It's different. The Patreon doesn't have a chat room, and there's nothing I can do about it. So essentially, I wanted to do it at 11, but they wouldn't let me set the notification. I have to be 5 minutes, at least 5 minutes, past the time that I'm setting the notification for. So I had to set it for 11:05. But every Sunday, you will be able to watch the live stream at 11 o'clock in the morning or 11:05, depending on when I do put the notification out. So yeah, it's just because I was running a little bit behind this morning. But every Sunday at 11 or 11:05, you should go into the posts and you should see it there. Yo, what's up, traders? What's up, Aaron? Great talks thus far. We'll have to watch later. My kids need some attention now. That's fine, my friend. It is put in there. Everybody can watch it whenever they want. So RSI is just an indicator for your bias. Absolutely. That is it. Nothing more. Nothing more. I do not generally take trades on a 50 check, right, on the RSI, but sometimes the trades will work out. Let's go back over here to the Aussie Yen. Because I was wrong on Aussie Yen because I let the news influence my bias on Tuesday. Because Tuesday we had the RBA, the Royal Bank of Australia, I think is what that stands for. They had a rate decision. So I was looking for bullish entries and I was targeting this up here, right? So let's go back into the hourly. Where are we? Where were we? I think it was in this area. No, it was right before that, right there. So this is where we were before the stream, right? Or during the live stream in the morning. We were around this area. No, that's late. Wait a minute. What's going on here? Where was that? Where was that at? I am so confused. I can't even find it. I'm so confused. But this move came in after that. That's why we started looking for shorts. But anyways, we were looking for longs, and I said if a specific area got closed below, then we weren't looking for longs anymore. But we were targeting liquidity. I'm just wrong. What day was the Royal Bank? Let me see over here. Give me a second. Let me see when the RBA was. It was July the 6th. So this is it, but this price action doesn't look nothing like what I was talking about. And it fell that day, like it fell that day. There, no. Oh, here, maybe this is what it was. It was this section here. So we were looking for a pullback. Okay, I'm on it. I'm sorry, guys. My brain was having a meltdown. We were looking for a pullback into this level to get long, targeting this level up here. It was about a 30 pip move. And the reason, 37 pip move. And the reason was because of the RBA the morning before. At 12 o'clock, you had the announcement here. This is when they had the announcement. And then you had a big bullish push up into, where was the announcement? It was at 12 o'clock. So this candle here, this was the announcement. And then you had bullish price action. So you were extremely green on the day. And it was a fake out move. So I said if we get an hourly closure below that level 83,886, we are no longer looking for longs. And this candle came in and closed right there at 6 a.m. So we were no longer looking for longs. And that was a good call, right? Because then this happened. So the next morning, we were looking for shorts. That was a massive amount of selling that came in. And we got short on this push up right here. Let's go to an 8 hour. Let me mark this so that way I know where it was. There we are. This push up here. This is when we got short. This is the level right here. This is your last support zone. So a push up into this. This is when I got short. And that trade was fantastic. I'm still in it, but only with 1/3 of the position size as I've taken profits. When you get a move like this, you're taking profits, right? You're selling, you're exiting your position, because especially in the end of a move, you have a big candle like that. That's going to get retraced, right? And it has been. The entire session has been retraced. This was all Friday's price action. Thursday night and Friday, it just went straight up. So this was the low that it took tick out. So to be honest with you guys, now, depending on what happens, we know the S&P 500 is still going up. We took out liquidity all the way back here to February 17th. So almost a whole year of liquidity smoked. This thing could go higher from here. Like, you could literally see a trend reversal. You're still trading well under, this is an 8 hour. You're still trading well under that, even with this big bullish pop, because you were so oversold. So you could probably see, or you probably will see, more stuff happening. This is the candle that I got short on. This push up. So we weren't even near the 50. Was it pound dollar? Something was testing the 50. Or close to the 50. Oh, it was the day prior. Sorry. It was the bullish day. We were getting a bullish test of it or something. It just didn't work out. So I'm never looking to get short on a 50 test, right? I just want to know where this is and what price looks like. So if we start pushing up into this 50 test, we got us a Heath level right there on the daily. So we will watch that, right? We will watch that to see how price reacts to it on Monday, Tuesday. That's right, daily. So that way we know. You did get lower closes on the daily, taking out support. So this push up can be an opportunity to get short again. You will not be looking to get short at all if you get that daily close above 139,489. And you will be watching smaller time frame charts to see that happen. So if you go into an 8 hour chart, this was a Heath level here. You already got a close above it. So this bullish candle here is going to be the next one. So we're going to be watching for what price does in this area come Monday morning when I wake up. If price is rejecting here, then we'll possibly look for getting short then. If you just blast through it, then we're not going to be looking for shorts, and we will let price get a little higher and then maybe look to get long on some pullbacks. It's not that I want to get long or short on pullbacks. It's just that's generally the best time to do it. In my career, I've found that it's best to buy red candles and it's best to sell green candles. Right? You don't never want to buy a green candle because there's a good chance you're buying the high. Or the same goes for taking a short, like on a breakout or something. I don't like that. On September 14th, 2012, the price of Aussie yen retraced to the supply zone. Was this a short setup even if the RSI was above 50 on the daily? On September 14th, 2012. On the wrong thing. Let's go over here. Make sure we're on Oanda. There's 20. What? September 14th. September 14th. Let me mark this. Alt V gives you a vertical line. Well, it's supposed to. Alt V. What's going on? Why didn't it give me a vertical line? Alt H. Okay, so why didn't I get a vertical? There it is. Alt V. Alt H will give you a horizontal, and Alt V will give you a vertical if you're not familiar with that. And you specifically said September the 14th. So let's go to September the 14th. Let's go to the daily. Just bear with me, guys. I'm trying to get it situated. So here's your heat level that you're talking about. And the RSI was above 50. That's a tough one, man. That's a tough one, right? Because it does show that the bulls are in control, but you knew just as soon as your breakout candle, which this wasn't even a breakout, once the low of the breakout candle gets taken out, that's generally when you know that something else is transpiring. So, I mean, yeah, I mean, if I would have been watching this, I wouldn't have got short on that. But if you look over here, like into this, you're back down below 50. So you could have taken a short entry on this. Yeah, you didn't get the exact high, right? You're not looking to get the exact high or the exact low. You're looking for higher probable setups. So on this bullish day, where did you trade to? You traded almost to the opening price of that bearish candle. Not quite, but almost, right? You took out the prior day's high. So upon a rejection of that, with like a bullish or a bearish engulfing hourly or something, you'll see it. Like on a 5-minute chart, you will see it. When I took that trade on Aussie Yen, I was watching the 5-minute chart, and I knew like the 5-minute chart was just boom, 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 straight down. Big range 5-minute candles. Went into a retest area, the 618. So anybody wanting to get long on that daily range expansion, they're going to be doing it there. So you did get a big bullish pop, and it almost traded all the way back up to my entry, but then just like 15 or 20 minutes later, it was right back below that. At that point, I knew the trade was almost, like, I knew it was in the bag almost. Just from experience, not because I have a fortune teller or a magic 8 ball, just out of experience of being in so many trades. I was like, yeah, this one's gonna hit targets. Almost guaranteeing it, right? So this would have been the situation here. You just have to be patient, my friend. So you would have seen this take place, right? This would put you ahead of the game, my friend. The fact that you noticed that is fantastic, bro. Just the fact that you noticed it. This is a big bullish candle, right? It's not a breakout candle, but you don't get short here. You wait. Just give it time. Are you going to miss this? Yeah, but who cares? Because you're only looking for an intraday range expansion. There's your profit. So being a day trader absolutely gives us fantastic opportunities to wait and pick our battles. We don't have to get long or short. We can wait for the most perfect optimal times. I guarantee you on this day, if you would have went into, let's see if I can do it, because I don't want to say I guarantee you if I can't do it. If it'll let me, I doubt it will let me go any lower than that. All right, so back to the daily. What did we see? We wanted that bullish day. So I went one day too many there. This is where it traded back up to, right? So this is what you're looking at. Look at that. That's an 8-hour Heath level right there. See? When I said on the daily, it traded up to the opening price of this bearish candle. Watch this. Here. This. That's your entry. 8-hour. Look what we did. Traded up into an 8-hour Heath level. You didn't get all the way up there, But if you go look on a 4-hour, there's a heat level right there. Bullish candle, last bullish candle before price trades away. It wasn't a fantastic entry. It was actually a bull trap. So, I mean, there's a myriad of ways you can get that. Yeah, it won't let me go into short or an hourly back that far. That would have been, the hourly is my favorite time frame. It's my absolute favorite. Daily first and then hourly. I love the 8-hour, but I'm a scalper, so I'm looking for those razor sharp entries. I'm talking razor sharp. Look at that entry, man. Look at that. Like, let me pull up the picture if I can. It's the actual trade, the actual position. I block out the position size because it's irrelevant, right? Let me see if I can pull it up. Give me one moment. AUDJPYLMNOP. I think it was on the 8th. There you go. There's the actual entry. The actual position. This is, I took it through TradingView, Forex.com. That's a live account. It's a live account. And if it's an Oanda, you'll see down here it says Oanda Live. This is the actual stop loss. I can't see the price, but it's above 83,328. Not much further though, because there's that white level. So you can't see the stop loss because of this little whatever that is. And that's the entry right there. And it was taken off that 8-hour. There's the push up. And look at the hourly candle. Look how bearish that was. Boom. So on the 5-minute, right, I'm watching this. Comes up, triggers me into the trade. And then almost as if though it was my short order. Once my short order got triggered, it's almost as if the market was like, oh, he's here. Now we can leave. It's not because I was trading with that big of a size. It's because I'm not the only person that took that entry, right? I'm not it. It's not just me. Millions of people, big money people. There's your rejection. And remember when I said on the 5-minute, it traded almost up into my entry. Look at that. I can't spread it out, unfortunately. But there is your hourly Heath level right there. That bullish candle, bearish close, bullish candle, traded up into that Heath level. You could have put a sell entry right there, stop above there, and look at the risk to reward. This is the quarterly low. That was one of my targets, right? That was the quarterly low. So if we get a pullback and we stay under 82,686, I'm looking for yen, Aussie yen weakness to continue for a quarterly. That's a 3-month range expansion. So this is potentially going to be a fantastic trade. This is why I get so hyped up and excited around quarterly opens, because it's an opportunity to position yourself to catch a quarterly range expansion. Screw a daily. Screw a daily. If we can get on a quarterly range expansion, then you're talking about a massive 3-month trade that you just hold and ride out to the downside. Be a fantastic trade. So let me delete these levels and I will show you the quarterly. Right here. That was the low. Now we have a new low. So we're trading up. Now on the quarterly, this thing's bullish. There's your quarterly rejection or bullish resistance. Sorry. Right there. There's this. Look at last quarter. You traded right down in there and bounced. So this isn't set in stone yet. Right? It's not set in stone that this quarterly candle is going to trade down. Where would be the next area to look? Well, the high of this candle and then the open of this candle will be an area of possible support. Because if you haven't figured it out by now, it's not Heath levels, it's opens, closes that price reacts to. All of them. higher time frame candles, the opening and the close of this candle will act as some form of support or resistance. It's an almost guaranteed fact, because at your quarterly open, price gets down there, you're going to see a bounce from there. So I will be taking profits ahead of that area. Well, I'll take profits and then I'll let it ride, but I'll be taking more profits when we get down to there. If we get down to there, because this thing could trade sideways for all 3 months. So it's not a guaranteed thing. Like, this doesn't mean we're going to push down to there, but I know where the market could possibly go. This close and this open, that's an area that's going to act as possible support or resistance. This and this. So those are your 4 major areas in this market. Big banks and hedge funds, they are looking at massive charts. Weeklies, monthlies, quarterlies. They don't care about 3 hours and 1 hour charts, 2 hour charts. That's not how they do it. KCSUSDT compared to Luna.com/comp for potential short if crypto fails. I cannot trade KSCUSDT. All right, I can't. But if you can, I don't know what that thing is. So it's not really doing what crypto's doing, right? It's doing something completely different. It's operating under its own. Well, no, it isn't. It fell just like when Bitcoin did. So yeah, yes, if you can trade it, if Bitcoin starts to fall, this would be the asset to short. It's off the lows by almost 200%. Right? You're off the lows almost 200%. So the opportunity for short side trading, if Bitcoin falls, this will be one of the favorite assets. I can only trade Luna and Comp. That's all I can trade. And those are the best that I have found so far, right? That I can trade. So that's why I brought them up. If you can trade this is only traded on Huobi and Binance. That's the only 2 places. Oh wait, this ain't even the one I'm talking. So yes, I can trade that. Sorry, Sean. I'm so confused. What is the asset? I got this asset confused with AXS. This is the one I was thinking of. Sorry. Yeah, this one's doing something completely on its own, by itself. This is, yeah, that's not what you want to short. So let's go back to yours, and I can trade that. I will see if I can pull it up on the futures platform. KCS USDT. Fantastic. Yes, for sure. Yep. There's a heat level right there, so we will see what happens. Yeah, I like it. Thank you for bringing it up. I don't know if I can trade it on the futures platform, but I will look. Let me go over here to... Where's derivatives, future pro? Let's see here. Give me 1 second. Let me get you all over there too, so you're not staring at that. Or is this signed in? Give me 1 moment. I'm just trying to pull it up on their KCS USDT. I cannot trade that on the futures platform. So I can only still trade Comp and Luna. They do have it, so you could probably trade it on margin. If you have a margin account with KuCoin, you could trade it. But I can't trade it on the KuCoin futures platform. So it's probably something relatively new. Do not short into support. Yeah, never do that, ever. Never do that, because you're going to get crushed if you do that. You're generally wanting to try to take your short positions into resistance or supply zones, and you're looking to take your longs into demand zones or support. That's generally what you're looking for. Obviously, it doesn't always work out. This is why we must use stops to protect our downside in case we're wrong. In case we're wrong, because I am only human. I have no clue what price is going to do, not 1 minute from now or an hour from now. I have no clue. So it's just one of those things. But we do look for the best risk to reward opportunities, and on Aussie yen, it was a fantastic one. And yes, if you can trade this, and that's only if Bitcoin starts to fall. Remember, you're not trying to take any shorts, probably. I'm looking for Bitcoin to start moving either this week or next week. I am looking for it to start moving because it's been doing absolutely nothing for about 3 months. Or a couple months, anyways. So, since this capitulation candle, and that was in May, June, July. So we're just starting July. So we've been trading sideways for a little over a month. And it's been very small range sideways. Now, Bitcoin's known for doing that. Like this section of price, it traded sideways for a very long time, but not nearly a month, just sideways. Fake out move to the downside. This was ahead of the halvening. That was just ahead of the halvening. And people were watching for a trendline break. I think it was this one, something like this. Right there. That's what people were watching. I was watching it too. But getting long is what I do. Like looking for that to break. There was resistance right there. So you can see on the first day, even though you got to break out above the trend line, you did not break out the horizontal. This was your horizontal resistance level on Bitcoin. I remember this day like it was yesterday. And then the very next day, boom, big bullish explosion. That's a breakout. That's what you want to see, right? Then you traded sideways, head and shoulders. Bitcoin's going back to zero. Yeah, right. Found support, and see you later. See y'all. That's one of those moves. Put in a big, fantastic downside candle, but fail to break support. There is your failure to break support. Let's get rid of this one. Right there. That's your bear trap. And how are we waiting to see if we know if it's a bear trap or not? On the trap candle, daily candle, daily close below support, that's your trap. So people are looking to get short on retests. But I don't, because I know traps exist. And I'm always waiting for that trap to reveal itself. If it is or if it isn't a trap. On the time when you get a daily closure above this candle's high or open, that's when your trap is revealed as a trap. This candle's opening was taken out by a daily closure. This candle told you that this was a trap. Then you could have looked and got long. But that's crazy price action right there. But you can still see that support, even though this candle right here, you could look at as new support. All right, it held. Both of these lines held on this push lower. So looking for longs. This thing is going to the moon. That was fantastic, fun time. And then this was just, my goodness. Bitcoin's not going to stop. Ever. Oh my gosh. Man, this has got to come to an end at some point. Oh my goodness. You know what I'm saying? And people just, they don't want to hear it. They just don't want to hear it. Like, look at all those gains. It's insane, man. You were trading at $9,000 and then crazy. Now, $9,000 was last year, but in the span of a little bit less than 2 years, you went from 9K to 60K. That's an insane run. Insane run. All right, guys, if you got nothing else, I'll end the stream, but I will give you a moment to ask any questions if you want. This thing is wedging up. It's going to break one way or the other. Mass, that's the resistance level. This is going to be support. A breakout. Hopefully it breaks out to the upside, because that's a pretty nice run up to where I'm looking for more intensified selling to come back into the market. I'm not saying that Bitcoin's going to go up here and make a lower high and then roll over. I'm just simply saying that you will see increased selling at those areas. Just because you will. All right, nobody has no questions. All right, guys. I will go ahead and cut it short. Or not short. We've been on for over an hour, but I try to answer questions. I think I've answered them all. Pretty much have. All right, guys. You have a fantastic day. I will be doing the Forex Weekly Outlook this evening around 5 p.m. As long as I have internet. For some reasons, the Sunday evening streams have been failing miserably. This one dropped a few frames, but not terrible. So we will see. I'm going to be showing you a lot of the setups that I am watching for your on the Forex market. I haven't been looking at crypto at all today. I've been focused on Forex, so I got some things to talk about. All right, guys, we'll talk to you then. Enjoy the rest of your day. Make sure you trade safe, trade smart, and always, as always, thank you guys so much for your continued support. It really means everything to me. You guys are the reason that I do these videos and stuff. So thank you so much from the bottom of my heart, and we will see you later.